What is going on, traders? Welcome back to the Traveling Trader. So our crazy baby mama, Cathie Wood, gave Tesla a bull case of $4,000 a share by 2025. And in this video, I will tell you why that is actually not that crazy. So in this video, we will be dissecting ARK's Tesla analysis, how they got to that level, and I'll be telling you how to trade this going forward, as we've always been doing on this channel. So if you get anything out of this video, leave it a big fat thumbs up like this. Leave it in the comment section below. Let me know how you're trading Tesla. The obvious answer being just buy and hold, but I want to give you some more creative opportunities that you might be able to leverage. And if you want access to all of my trades, all of our portfolios, we have over 5,000 traders in our trading group. Link is in the description below. Come and join the community. You'll get a lot out of it. And if not, I appreciate your viewership nonetheless. Let's get right into it. All right, so over the weekend, Crazy Cathie laid out 3 scenarios for Tesla's price: an expected value, a bullish case, and a bearish case. And they used something called the Monte Carlo simulation pricing model. Now, this is something that's not proprietary. It's actually something that's used in the finance industry. Without going into too many details, it's basically just a simulation model that tries to identify different outcomes and introduce random variables to see how those outcomes vary. So based on that, the expected value for Tesla, according to ARK's Monte Carlo analysis, is $3,000 per share by 2025. Now, what would Tesla's market cap be at $3,000 per share? Because that's the most important thing in my view. A lot of new traders focus on the stock price, but market cap is way more important. That's why you'll get newbies ask questions like, why is Apple so cheap? It's only trading at $130 per share. Ignoring the fact that price is only one variable of the equation. The number of shares available is the other part of the equation. So price times the number of shares available, you get the market cap. That's why Apple's trading at $2 trillion. It just has a ton of shares outstanding. So in Tesla's example bear case, a share price of $1,500 assumes around a $1.5 trillion market cap. Now, we already have 4 companies in the US that are above $1 trillion. One above $2 trillion, Apple, which I referenced earlier. But none of these companies are car companies, obviously. So you have Apple, Microsoft, Amazon, and Alphabet, or Google. Now, in terms of US companies, Tesla is actually in the top 6th. It's the 6th largest company by market cap. So just that alone, in 4 years, a $1.5 trillion market cap doesn't seem out of line, considering where it's trading now. But let's dive a little bit deeper. They're assuming that without any production constraints, Tesla can sell 5 million cars by 2025, as opposed to the 500,000 that they're currently selling. Now, the good part about this is they actually have an average selling price that's less than the current average selling price. They're assuming that Tesla will be able to scale and thereby lowering the average selling price of their cars. And the reason this is good is because it's not assuming that Tesla needs to unrealistically boost prices in order to achieve this pricing target. And again, we're still talking about the bear case, which is $1,500 a share. They're factoring in $23 billion of revenue from Tesla insurance, and they're assuming that autonomous ride-hailing will not be live by 2025. Now, one thing you will not see in here for the bearish case or the bullish case is Tesla's energy storage business and their solar business. They chose to leave these out of the pricing models. Also, any previous Bitcoin purchases that Tesla made are not included. Now, a few key things that they added to the model. They pushed the forecast price target by 1 year, because previously it was 2024, now it's 2025. As I mentioned, they added Tesla's insurance to the business model. And in the bear case, they're assuming that autonomous ride-hailing is not available. However, there will be some element of a human-driven ride-hail service. They increased the probability of Tesla achieving full autonomous driving within 5 years. Now, my point of view, I think that the bearish case is very plausible. Here's why. I know that Tesla is currently selling around 500,000 vehicles a year, and 5 million seems like a stretch. That's 10 times the number of vehicles that they currently sell. But if you take into account that 44 out of 50 states in the US already have EV initiatives on the books, obviously California being the most aggressive one, planning on going full EV by 2035, then the assumption is that the cars that we see on the road now will have to be replaced by EVs. So it's not like Tesla is planning on selling 10 times more vehicles in addition to the vehicles that are currently on the road. This is an industrial inflection point, sort of like a new industrial revolution where the gasoline cars are going to be replaced by the EV vehicles. So this is totally plausible. We've already seen the US electrical vehicle sales market 100x from 2008 to 2018. So Tesla 10xing from 2020 to 2025 is really not that big of a stretch, especially since they are the most well-positioned to scale and they've already figured out the margin problem. Okay, now the bull case for Tesla puts Tesla at a market cap of $4 trillion. This obviously includes autonomous ride hailing, i.e. robotaxi, meaning that you could just summon up a car like you would Uber, and a car without a driver will come and take you to wherever you need to go. There isn't even a single company on planet Earth, let alone in the US, that's as close to Tesla is to achieving this. So specifically in the space autonomous ride hailing, we're going to have to assume some level of monopoly for years to come. Moreover, specifically with robotaxi, they're going to be dipping into the ride hailing market share already, which currently stands at around $130 billion market cap if you combine Uber and Lyft. Now, the bull case does assume that Tesla sells 10 million cars by 2025. Is that realistic? Well, it really depends on how fast the rotation happens. I don't think that anyone can really predict that. Also, it's important to consider that we're not only talking about the US here, we're talking about worldwide. And Tesla isn't the only company that is selling EVs. Now, they're the closest in terms of autonomous driving, but that may not appeal to everybody. Now, regardless on where you fall on the spectrum between the bear case and the bull case, I think it's safe to say that most people assume Tesla's stock price is going to be higher than it is today. Obviously, there's a certain element of some of these things being priced in, but they can't entirely be priced in because there's a high degree of unpredictability here. We don't know if the ride hailing is going to be fully human by 2025, fully autonomous by 2025, some of it human driven, some of it autonomous driven, if autonomous driving is even available by 2025. So in my view, there's still a ton of value left in some of these things actually being rolled out to production. I'll leave a link to ARK's full article and study down below so that you can research it for yourself. And now let's get into the fun stuff. How would you trade Tesla going forward, assuming that you don't have any Tesla positions? I know I'm gonna get a bunch of comments down below saying just buy and hold. Of course, that is a strategy, and of course that's something you can do. But let's get a little bit more creative and sophisticated here because there are other things you can do. Okay, the first non-option strategy is pretty easy, dollar cost average, meaning don't worry about Tesla's price day to day. Just take a certain amount of what you want to invest in Tesla and buy it on a scheduled basis. You could do this every 2 weeks, every month. Obviously, it's up to you. I'm not a financial advisor, just giving you some ideas, and you can tune as you like according to your budget and your risk tolerance. But dollar cost averaging is basically buying a certain amount on a scheduled basis. So you could put in maybe like $200 every couple of weeks or $1,000 a month or whatever works for you. Now, I like to take this a step further and dollar cost average disproportionately. What do I mean by this? Well, when Tesla falls to a major support level, one of the major moving averages, for instance, like the 100-day or 200-day moving average, and I did a whole intro to technical analysis for beginners. I'll link it here. Watch that if you have no idea what I'm talking about. It'll help you tremendously. But when Tesla falls to one of these major moving averages, I disproportionately load up on those levels, meaning if I am buying Tesla at say $500 every month, when I finally see it fall to the 100 or 200-day moving average, I might put in an additional 1,000 or additional 2,000, again, depending on how much money I have. It's all relative, I know, but the point is to disproportionately load up on the major support levels. Okay, and the second strategy we'll talk about is selling cash secured put options. Now, a few people have sent me videos of other prominent YouTubers now talking about this. I'm glad this is finally propagating, but we've been talking about this for years. In fact, I sell cash secured puts on Tesla every month. It's a great way to earn free money in my view. So let's dive a little bit deeper and I'll show you what that looks like. Because Tesla's price recently dropped to around $654, you can actually sell a cash secured put that's relatively low for a lot of money if you're willing to go out to July, which is what, 3-4 months from the recording of this video. So you could sell the 500 put on Tesla expiring in July 16, 2021 for about $4,000. Now, what this means is if Tesla never hits 500 bucks and you never get a sign, you keep $4,000. If Tesla hits 500 bucks and you get a sign, then you'll be required to buy 100 shares of Tesla at 500 bucks. But remember that you collected $40 per share for selling the put, meaning that your cost basis is not $500, your cost basis is actually $460. Who wouldn't want to buy Tesla at 460 bucks? Now, the caveat is you will need the capital to buy 100 shares of Tesla at 460 bucks. But if you do have the capital, this is a great way to get paid to wait to buy the dip on Tesla. Now, you can obviously do this on a way shorter time frame, meaning if you wanted to do something that expires next month, obviously you'll get paid less money, but you can do that if you don't want to keep that capital held for a long time. So the 500 cash secured put on Tesla expiring April 16th will pay you around $1,000 bucks. Now, strategy number 3, buying a leap. What is a leap? I did a whole tutorial on leaps, which I will link here, but a leap is just a fancy term for a long dated call option, usually 6 months or more in advance. And if we're talking about ARK's bull case here, we'll want to go pretty far out if we are trying to trade according to the report. Now, the furthest you can go out is March 2023. This is obviously going to cost you a lot of money because there is a lot of time value left in these options. But you would essentially buy a very high delta call option somewhere around the 0.8 delta range, and you would sit on it for the long term. So in this case, I would buy the 450 call on Tesla for $348 per share, or in this case per contract, because we have to multiply it by 100. Since each options contract represents 100 shares, this is going to cost me $34,800. Now, obviously that is a ton of money. However, this is called a stock replacement strategy, because if you were to buy 100 shares of Tesla right now at $650, that's going to cost you $65,000. In this case, you're paying about half and capturing 80% of the stock's move. That's what the 0.8 delta represents. It basically means that you are capturing 80% of the stock's move. So for every dollar that Tesla goes up in price, that option goes up by 80 cents. So you're paying half to capture most of the move. That's why it's called a stock replacement strategy. Now, are there any cheaper things that you could do? Yes. So you could buy a call vertical spread, which doesn't require nearly as much capital as a leap or a cash secured put. Here's how this would work. If we come in here and let's just say we go out to January 2022, you can buy the 650 call, sell the 660 call. This creates the vertical spread. This is called a bull call vertical spread or a call debit spread. I will leave a link below that explains this, but essentially you can buy this for $3.63 times 100. Each contract will cost you $363. Now, this is a $10 spread, meaning that if Tesla actually finishes above $660, then you make $637 per contract, almost double your money. And as I said, this is going to cost you a lot less. It'll only cost you $363 per contract, and you can increase the number of contracts as you like according to your budget and your risk tolerance. So this is one way that you can also leverage a long-term play on Tesla without having to spend tens of thousands of dollars. However, just keep in mind that your profit here is capped, unlike a leap call, which your profit is infinite because Tesla's price can go up into oblivion. In this case, you are hedging by selling another call, so you actually have a capped profit at $637, but not bad because your capital commitment is very low and you get a chance to partake in options trades as well. Anyway, traders, that is it for this video. I hope you got something out of this. I hope that I shed some light on some trades that you might not have thought of. If you have any questions, if you want to join our trading group, link is in the description below. We have plays like this going on every single day. There's also a beginner section where you can ask away regarding some of these complex options trades. Leave a comment down below. Let me know how you plan on trading Tesla, obviously besides buying and holding. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.